get lonely, so this is my new seeing people is seeing them here on Zoom, so thanks for showing up. Before I dive in, I just want to give a little context. I always want to sort of teach the big picture before I teach specific skills. And so I always try to lay out like the big picture of all the things you need to know before you know this one little thing that I'm going to focus on. And it's been a year and a bit now that Marissa and Heather and I were trying to lay out a whole agenda of all the things that we thought we wanted the grantees to learn about. And we met once and we came up with a list, and then we didn't finish, then we met again and we didn't finish, then we met again and we didn't finish. And then like 2 or 3 months into that project, we realized we pretty much had a master's program in nonprofit administration laid out. And those were all the things, and there wasn't really anything to do to make that list shorter, because there isn't really any way to change the reality that those are all the things you really need to know. So I just want to give that context before we take this one really specific topic this morning. So this morning, we're kind of jumping ahead from now.
Really quick, Poppy, can you speak up a little bit more? I'm getting feedback that people can't hear you too well.
Hold on a second. Let me just see if there's any way the phone can get. Is this helping? Is this louder? Not louder. I don't know what to do. I've never had this problem. I'm using my phone, so it's not a computer thing.
I can hear very well. Maybe people.
Oh. I turned my volume all the way up to see if I'd sound louder. I don't know if there's any settings, Marissa, that are on the Zoom that people can turn the volume up. Now I can't hear you. Now you're on mute.
I guess on your end, for the participants, you can turn up the volume and maybe that might help. Or either if you have a headset.
Yeah, I'm wearing the only headset I have. I've never had this problem with it, so I don't know. I'm so sorry. I don't have anything else I can do. Stop me again if it's really not working. So what I was going to say is the topic for today is reading the financial statements, how to read and interpret them. So kind of obvious, I hope, that before you can read them, there's a whole lot of work that has to go into actually creating them, right? So, if I was teaching this in terms of maybe how to do a skill, we'd maybe have a whole session first about how to actually get those numbers in place so that you can read them. But I think it's actually really useful to start here for you, for where you are, because this is, a lot of you, I think, are in a place where you're not preparing the financials, but you are seeing them and you do want to read them, or you're trying to read them and you're not seeing good, it doesn't quite look right, and you want to help understand what the problem is and what financial reports you really should be seeing. And if you're not seeing those financial reports, then to understand why that is and what you can do about it. So that's the approach I want to take today. It's a little bit of a leap ahead to what things should be and how you'll use them. And then we'll have plenty of time to kind of jump back and get into, well, how do you get to that end place of having those reports? Am I sounding at all better? A little bit? Okay, good. All right, I'm going to go ahead and share my screen, but I just, there are not a lot of people here today, and I'm not trying to cover a lot of material. I'm trying to more go deep. So please just don't hesitate to stop at any point with a question. We'll be able to get through everything just fine. So I'm going to share my screen. So what we're going to cover quickly, we're just going to go through different perspectives on who needs these financial reports. And I think that will help create the context as well. Because you're probably talking to, you maybe are executive directors or leaders yourself, maybe board members, talking to board members, understanding who needs what kind of report. Then we're going to talk a little bit about the role of the outside accountant in preparing financial statements and the difference between financial statements that are prepared by an outside accountant versus the ones that you prepare inside yourself. We'll talk a little bit about how you can read the 990 tax return exactly the same way as you read most of the financial statements. The balance sheet and the income statement, the main financial statements, are included in the 990. They're just formatted a little bit differently. So I'll show you that. And then we'll talk some more about some internal financial reports that aren't the traditional formal financial statements that you give the board and that the accountant prepares for you, but they're the critical internal reports that most managers need day to day in order to run their business. And then we'll close out by talking about some resources, and certainly by that point, we can have a very open discussion, but I hope we can have discussion the whole way through. I also want to say I'm going to show you some sample financial statements, but if anybody has sample financial statements that they want to share from their own organization, let us know and we can share screen and we can walk through your financial statements rather than the ones that I have. Okay, so who needs the financial reports? Let's start with the board, because they are the ones that have the final responsibility for the organization. And it's their duty to make sure that the organization is functioning financially, has enough money and enough of a plan that they're going to be able to meet payroll at a minimum coming up, or if there's a total shortage of cash, and it absolutely happens, the board needs to know in time to give people appropriate layoff notices if something's gonna, if they're just gonna run out of money. So it's really important that the board has the big picture. Typically, the board would not receive monthly financial package. That's typically a little bit more than they need, and it's more work than it is worth, unless maybe you're going through some really difficult time and the board feels the need to jump in and manage more tightly for a good reason. That happens, absolutely. But normally you want to think about quarterly reporting. And so the board is going to see what's called a statement of financial position, and that's nonprofit speak for balance sheet. These quarterly reports to the board, you typically prepare yourself. You typically don't have the outside accountant prepare them. And so for a lot of you on the software you're on, it may be a report called balance sheet. You may not use that formal nonprofit language, statement of financial position, and that's fine. There's nothing wrong with that for the quarterly. At year end, you want to use the formal names, but it's fine during the year to use the more common term, which is balance sheet. The second report they're going to want to see is a statement of activities, which is a nonprofit name for an income statement or a profit and loss or P&L. Those are all terms that are used interchangeably. Income statement, profit and loss, P&L. But in formal nonprofit language, it's called a statement of activities. And what the board really wants to see isn't just a statement of activities, but they want to see the statement of activities shown side by side with the budget. So if they budgeted $100,000 of contributions income and it's on a calendar year and it's June 30th, they're kind of hoping to see around $50,000 already in contributions income. And they want to see those numbers side by side so they can quickly eyeball if it looks like you're about halfway through the year or not. Now, a lot of times you're not going to be halfway through the year because your year is really lopsided. Maybe you have most of your activities in the fall. But when you present, or whoever presents to the board, to the financial statements, should be able to answer that question. The reason it's not halfway through the year is because we have our big fundraiser in the fall, right? There should be answers. So that's the only reason the board wants to see them, is so they can ask those questions and get those answers. The next thing the board should see, and they won't necessarily know to ask for, is a cash flow projection. And we're going to talk about this a bunch more, and you're going to see examples of it. This is not a formal financial statement. We'll talk about this some more. There's a formal financial statement called a statement of cash flows. It's basically useless. I'll show it to you, but it's useless. What is useful is a cash flow projection. This is how much cash we have now. This is how much we think is coming in. This is how much we think is going out. This is how much cash we think we're going to have at the end of September. Therefore, we should not panic. Things are tight, but they're okay. We have no reason to lay anybody off, no reason to cut back our programs. We're going to have enough cash on hand. That's, for most organizations, that's one of the critical conversations you need to have, of course, before the board meeting with management, right? To get ready, and then to the board at the board meeting to assure them that things are on track 3 to 6 months into the future at a minimum. Now, of course, it depends on the organization, right? If you're an organization that's already received a substantial endowment and you never have less than $1 million available because you have that endowment, you probably don't have the same sense of urgency around this cash flow projection. But you're still not supposed to spend the endowment, right? You're supposed to be leaving the endowment alone and worrying about your current cash. So you might still do one as a good discipline. But for some nonprofits that are very small and very new and really going project to project, it's very common to need to manage cash flow very, very closely. And again, we'll talk about that some more in a little bit. Annually, the board wants to see financial statements that have been prepared outside of the organization by an outside certified public accountant. We'll talk some more about that in a second. They want to see the Form 990 if it's required. Not every organization is required to file an IRS Form 990. Some are required to file something it's a 990 on a postcard. The board doesn't really need to see the postcard because obviously the postcard doesn't have much information. So if you are required to file a 990, the board needs to see it. If they don't need to see it, you probably need to present to the board very clearly why you don't need to file. The criteria is less than $25,000 on your balance sheet, and you have $10,000, therefore you don't have to file. So the board understands that you didn't just not file because you didn't want to, right? And then the board is annually going to ask for a budget for the upcoming year. And we'll talk a little bit more about what a budget looks like. But the most important thing to preview on the budget is that you want to build your budget to look exactly the same way that your income statement is going to look. It's a really common problem that nonprofits, the ED builds the budget based on what the ED is thinking. And meanwhile, the bookkeeper or accountant are keeping the books the way they keep the books. And as it turns out, the ED is using categories in a different order with different names than the categories that the accounting department is using. And so the board might approve that budget, and it might make perfectly good sense if you read it. It's not confusing at all. It makes perfectly good sense. But when you give it to the bookkeeper or accountant, they can't match those budget categories up exactly to the categories they're using. And so then you never get a good budget to actual report. And it's just one of those things that just slows everybody down and is irritating and just isn't a good practice. So that's a little preview of the budget process. All right. My computer is moving backwards. I'm just having one of those technology days. Okay, what do managers need? So managers need those cash flow predictions before the board, right? If you're a manager, your job is to present to the board so they don't panic, right? Even if you're panicking and you have to present some really bad news to the board, your job is to present it in a way that they can act on it, not panic about it, right? And that's only going to happen if you have that knowledge and enough time to sit down and think about what you need to do, think about what kinds of tough choices the board might have to make, and be really ready to answer their questions. So you need those cash flow predictions in plenty of time to manage the expectations of the board. And in order to do that, you're going to also need budgets and budget to actual at the program level, right? So the board asks for this annual report for the whole organization, annual budget. If everything goes well, they probably don't want to see budgets down at the program level because that's your job to manage those programs. But for you to manage those programs, you do need to see the budget at the program level. If you have 2 or 3 programs, they're each going to need their budget because you need to hold each of those managers accountable to managing to that program budget. And then your job as the director is to manage all of it together. And then the third thing you need is the grant and contract budgets. Those are the individual funders. And for some of you, this may be news that I'm going to say, but this is so important. And it's such a common mistake for early, newer nonprofits. Your individual funders and your programs should never be the same. You should always make sure they have different names. Sure, sometimes you do have one funder that funds one program and one program that is 100% funded by only one funder. But the ideal situation is you have, let's say you have 3 programs, and each program has 2 or 3 different funders, and some of your funders fund 1 and 2 programs, and some fund programs 2 and 3, and every once in a while a funder will fund all 3 of your programs, but you can do any combination of that, right? And so the only way that's going to work is if you maintain a very clear separation between the program, which is something the board sort of authorizes. Your program is to do this thing and it's called these words, that's your program. And then you go out and you get different funders to fund that program. They may fund projects within a program, right? But they're funding those projects under that program. So in addition to the program budgets, you have to have accounting for each of your individual funders. You need to be able to say, you know, if you have a teen program, you need to be able to report on the teen program as a whole. And then if the Johnson Foundation is funding the teen program, but let's say only 50%, you need a report just for the Johnson Foundation that shows just what they're reporting. I'll come back to funders some more in a minute. What does the IRS need? The IRS needs some kind of different things. The good news about the IRS requirements is that they sort of require the basic architecture of what you need for everything, because they require you to be able to separate administration and development from programs. And that's another very, very common thing I see when I meet a young nonprofit for the first time that hasn't had the right accounting help. And they've been doing their 990, but I take one look at it and I know it's actually wrong, because they've put all their dollars, they're reporting all their dollars as program, which sounds good and you think it sounds like what the funders want to see, but it's not, because the funders know that it's not possible to do things with 0 administrative costs. And they actually don't want you to have 0 development costs, because they say, well, why should I give you money if you're not even trying to get money from other people? I want to give you money because they see that you're putting effort into getting money from lots of people. And so I want to participate in that. I want to be one of the many funders that you go to. And so with a quick look at the 990, you can tell if an organization has at least a minimum concept of the difference between programs, administration, and development. The IRS also requires you to show total expenses for the year for each of your largest programs. So if you have a whole bunch of programs, let's say you have 10 programs, they only want to see the top 3. If you only have 3 programs, you're going to show them all 3 programs. But the same thing, it's basically saying your accounting system needs to be able to give you that information so that you can put it on your tax return. If your accounting system can't do it, then your accountant can't do it because you just don't have the numbers. The IRS is going to require you to show the salaries of officers and other top earners separate from other salaries. So that's just like a little detail that you wouldn't necessarily think about or care about, but the IRS wants to know. The IRS is also going to want you to track any related party transactions. So especially in small communities and rural communities, not a lot of people, not a lot of capacity, everybody wears multiple hats, right? So it's easy for the IRS and sort of the nonprofit institutes to say, oh, you should never have a board member or be a contractor. And yeah, that's a good rule. But it's also really common in a small rural community that that board member is just the person that holds those skills in the community. and they are the best person to hire to do a contract. It doesn't mean you can't do it. You can do it, but it is called a related party transaction, and you do need to report to the IRS that someone serves on the board and also is a contractor. And you do need to have extra documentation that what you paid them was fair and reasonable, what you would have paid any unrelated outside person. The board member didn't exercise any undue influence on you to kind of, make it clear to you that your life would be unhappy if you didn't write that check. And I will just tell you as a personal aside that I had a terrible experience myself being the executive director of an organization once, and that was exactly what they were doing to me. It was really, really uncomfortable. So it does happen. It does happen, and that's part of the IRS reporting requirement is to give, if you're in that position where you're being pressured, it helps you stand up for yourself when you can say, this is going to have to be reported to the IRS. We're going to have this additional documentation. We're going to have to be able to demonstrate that what the fair rate would be for this person. And if we're shown to be paying the person, twice what we would have paid someone else, then the IRS can absolutely come back and fine you, penalize you for that.
Puppy Carrie has a
Should I stop
question.
with the question? Yeah, please.
Thank you so much. So I ran into this in that it wasn't a board member, but it was a staff member, the only one in the area to be able to provide this cultural expertise. And it was a huge situation that the terms conflict of interest totally entered the scene, and it was a
Yeah.
mess. And I didn't have any kind of like sort of guidance prior to the event, and I had done my research, and it would have cost me more to bring another person maybe from 300 miles away to do the same thing. And so it really ignited within the agency the need for some sort of policy and procedure to help the situation, in that was the only person in the area with the credentials, the cultural credentials to be able to provide such an event as a presenter. So I think that if I had a request, I would say, to others that there be some sort of document, maybe a form or some sort of procedural document to help with that process of utilizing board members or our fellow staff that who are uniquely enveloped with this sort of qualifications to be utilized, especially when it comes to having to pay lodging or mileage for someone that's has the same qualifications, but the cost would be even greater. Thank you.
Yes, thank you for that example. That's right on. So the point is, it doesn't mean you can't do it. It just means you have to have a really good process to show that what you did was not favoritism. It wasn't because it's your cousin. It was because it was the best choice, and it would have been the best choice regardless of whether that person was on the board or on staff. And Carrie, to your point about policies and procedures, which, Marissa and Heather know, I'm dying to just talk to you guys every single week with a whole new unit of information, and one would be all about accounting policies and procedures manual, right? But I think to that point about policies and procedures there, I think it would fall under your general contracting policies, because it would be specific additional things you would do if it's board or staff, but you also need to think about in small communities, all the family relationships, right? And all the ways that someone, and someone should just be friends from, grade school. They're not related, but they're totally friends. So you need to have all your contracting policies really set up to show that you did your best to get some other perspective on who else you could hire and why you came to your decision fairly and objectively. The only difference is the IRS won't look for those things, but they're still best practices, right? But these things, the IRS has the legal authority to make you answer those questions. The other things are just things that you yourself should do. All right, so the IRS will ask you some questions about different types of income. They're going to look at, they have different lines on the 990 for membership income, donations, contracts for services, grant income. Investment income is a totally different line, and special events are also recorded separately. So when you set up your accounting system, again, a whole other class I want to teach, but when you set up your accounting system, you need to make sure that at the minimum, you have the accounting income categories that the IRS is going to require. You may want to have other categories as well, but at a minimum, you need what the IRS wants. And then the final thing, and I don't want to go into it in much detail because it's really a whole other class, but there is something called unrelated business income tax. You probably don't have it, but it is on the board checklist, and it is important for you to keep an eye out for it. And if you're doing anything that you think might be a separate business that's separate from your charitable purpose, keep an eye on that and get additional information on how to track that. It doesn't mean you cannot do it. You can do it. It just means you need to report it on your tax return. And if it's truly an unrelated business, you're going to pay tax on profit just the same way a for-profit business would. And I'll just give you a simple example that might make sense in your communities. Some people want to grow food to feed the community because they perceive there's not enough healthy food in the community. But also there's people and some people want to do that through the nonprofit, right? They want to grow the food through the nonprofit and distribute the food through the nonprofit. But there's someone else in the community who came home with that exact same idea, and they want to farm for profit. They want to grow the food and sell it. And they're not trying to be exploitive, but they do want to cover their costs and make some money off of it. So the idea is that that person has to pay tax on that activity. The nonprofit shouldn't do it without paying the tax. Now, there are plenty of ways the nonprofit can do it without paying the tax by making sure that activity truly meets all the requirements so that it isn't an unrelated business activity. But there's also a whole lot of ways that the nonprofit could, not knowing what they're doing, do it so that they would have to pay the tax. So that's just a little warning or preview of that issue and something to keep an eye on.
We have one more question
right,
from Carrie before we go into the next session.
Please go ahead.
Yeah, thank you. So I'm at a place where I have this question about, so we get a grant, right? And there's that account number for that particular grant. So then we're asked to do like presentations to other organizations, and then they want to pay us. And we say, we can't take payment. Then they say, well, we'll donate it to your program. And then it's like, okay, if you, because they want to give us something. And then also the other thing, maybe special events where people are, again, they're selling maybe T-shirts or something, and we don't, we're bound not to be raising money. So then somebody will say, well, we want this profits to go to your program. You're doing such great work. And so what our agency has done is they created another account for me where it's a whole another number, and they track it as far as where I can have people put that money. And so from there, they also asked me to create a line item so that there's tracking of how that funding is spent. It's not a lot of money, like right now, I think I have $190 in there, and but it's money that's coming into the agency that I don't want to take from anybody and say, I have the people, the donators, or the people who want to give us the money to write it a check or give it directly to the finance department so that there's not any kind of sort of allegation that can come. When I was doing other projects in other cities and we had income coming in, I had somebody take care of the money, a person checking that money. somebody is always going to say, well, you're taking money in. I'm like, nope, check this out. This is who's handling the money. This is their records if you need to see it. So, I just always find how we have to protect ourselves when money is the story. And it's sad. It's sad that people would go to that length. And I just feel like this is the perfect procedure, the perfect setup, in that people who want to give the program money, it goes straight to the finance department and it doesn't come through me. I just wanted to share that much.
All right. So again, I mean, what I hear from that, Carrie, maybe Heather and Marisa, is a good another session we could do on policies and procedures, because it is, and like I said at the top, like we can't take it all on at once. And so these financial statements, there's this underlying assumption that the numbers here are good because they came out of a good process. If you don't have a good process, it doesn't matter trying to do financial statements because the numbers aren't good. And that's the perfect introduction to this next section. I want to talk a little bit about what an outside accountant does that's different from what you do internally. So first of all, who is a certified public accountant? So this person is going to be licensed by the State Board of Accountancy, whatever state you're in. And I just had all of a sudden my brain went, oh, I wonder if any tribe licenses their own certified public accountant. Because I know some lawyers are barred by the tribe directly. And there's some corporations that form under the tribe, but I don't know if there's any tribe that licenses a CPA directly. But most CPAs are certainly licensed by the state where they practice. They could be licensed by more than one state. And that licensing, pretty much everywhere in the country, you need a 4-year degree, not a 2-year degree. And it can be in almost anything, but you have to have a substantial number of units in accounting and financial and business topics. So it's not, you can have a degree in biology, but you have to have taken pretty much a whole year of accounting anyway. Then you have to pass a 3-day examination that in places like California, the CPA exam has a lower pass rate than the bar, and the bar has one of the lowest pass rates in the country. So the examination is a big deal. You do not pass it if you do not understand the content. I'm going to talk about the content in just a second. And then that's not enough. They still don't get licensed until they've spent 2 to 3 years doing the work under the direct supervision of someone who's already licensed. So I really want to emphasize that this is a highly trained person. They have already devoted years of their life to something that's not that much fun or that interesting. So they can be really expensive and a little boring, and that's okay, right? You're respecting that they made that choice to do that service, and it is a valuable service, but you're going to pay for it. And you may have trouble finding CPAs that have the time to work for you, certainly at a low rate, because there aren't that many of them. And the whole reason they went through all that is pretty much to be able to make some money. That said, I've never met a small town CPA that wasn't just a complete bleeding heart and didn't want to help everybody. So, it's not really all money. There's a lot of generosity and community spirit. And a lot of them are always saying, I just can't serve on another board. I'm already on 3 boards, and I do soccer, and I do this, and I do that. So one of your jobs starting now is to find a CPA and make friends with them and start figuring out how you're going to get them on your board, because it's a really valuable board member to have, and it might take you many years to develop a relationship with someone and convince them to serve on your board, because so many people are going to try to get them on the board. All right, what's their role? What's all that training for? The training is to be independent and objective when they look at your numbers. They're not supposed to be your friend. So the person who's the CPA on the board is going to give you the inside story, right? But they can't be your outside CPA. By definition, once they're on the board, they're inside, right? The outside CPA is not there to tell you what you want to hear. If they tell you what you do not want to hear and you argue with them and you insist that they have to do something else, the rule is you have to pay them anyway, and they have to tell you the truth anyway, and they have to make you report your numbers truthfully. And if you'll see, a CPA will refuse to complete the engagement. They have a whole ethical checklist that they've gone through, and they've determined that you are unethical and they are ethical, and they're not going to help you to essentially lie to people with numbers. That's their duty, is to their state license. Their duty is to the public, that when financial statements come out on their letterhead or with their signature, those numbers represent, at the very least, that they've been put together according to these formal rules that are called Generally Accepted Accounting Practices, or GAAP, okay? So this doesn't actually mean that they test for fraud. They have no idea if there's fraud. They have no idea how many errors might be in your transactions. But what they do know for sure is that if they take your numbers as a given, the way those numbers are put together into these financial statements, the financial statements have a certain correct name. The order of presentation on the financial statement is the order. There's only one correct order. Remember the 3-day test everyone fails, right? You don't pass that test if you don't know the correct order of how things are presented on these financial statements. Because the idea is that a banker or an IRS auditor or an interested donor, they want to be able to pull up all the financial statements of several different organizations and look at them side by side and know that although each organization is different, they're reporting their numbers following the exact same set of rules and interpretation. So the CPA's job is to know what those rules are and to apply them fairly to the transactions. So that's totally different from what you do internally, right? And that's why we really only do it once a year at the end of the year. You don't need all those formal rules for every quarterly board report. And there's a really good chance that if you're doing board financial reports quarterly, there's going to be 5 or 6 things in there that aren't strictly according to these GAAP rules. And that's fine. And it's fine for your board and it's fine for quarterly. But at the end of the year, once a year, you want to make sure everything lines up with these rules. So what the outside accountant can do for you, these are levels of engagement. Audited financial statements are the most expensive, most difficult, and they actually test the individual transactions to see if they are truthful, to see the substance, to look for fraud. They don't guarantee they'll find fraud, but they will absolutely look for fraud, and they will look for errors. Reviewed financial statements, they don't look as hard. They will look to certain things. They'll do certain things to prove that the balances are reasonable, but they do a whole lot less than they do with an audit. But an audit and a review are the same in that the financial statement presentation, the words they use, the order they use them, the way they do the footnotes, follows that generally accepted accounting procedures exactly. The lowest level they'll do is what's called a compilation. And a compilation produces financial statements where the CPA really says, I kind of just cleaned it up. I put the right names on the statements and I put them in the right order, but I actually didn't even do all the financial statements that are required, and I didn't do the footnotes. So the formal package that's required that has to be there for audit and review is balance sheet, income statement, statement of cash flows, and full footnotes. And the footnotes can run 20 pages, right? On a compilation, they can just do balance sheet, income statement, no footnotes, no statement of cash flows, which is fine for most nonprofits that are small and getting going. You don't need that statement of cash flows. You don't need those footnotes, which means you don't need a review and you don't need an audit, and you don't have to pay that extra money. But it's still a really good idea to have the outside CPA come in and at least do that compilation, because as they do it, they are checking for big things that are just not making sense. For example, super common, people they build a building, right? You build a building. And so you keep going to the hardware store and buying supplies, and you keep expensing the supplies as supplies expense. You get to the end of the year, you have $100,000 in supplies and no building on your balance sheet. That's the kind of thing the outside CPA will catch immediately at the end of the year, have that conversation with you and move the money from supplies expense to building. It's just a simple example, but that's why you need them at the end of the year. The other thing they're going to do is once they've done those financial statements, they'll prepare the 990 if it's required and any related tax filing, because you want the financial statements and the 990 to have the same numbers and tell the same story. All right. So these are just reviewing for you. These are the names of the formal statements, okay? Statement of financial position is a balance sheet. Statement of activities is an income statement. Statement of functional activities is basically an income statement by program or class. The statement of activities is just going to show for the whole organization. It's not going to break it down between programs, administrative, and fundraising. The statement of functional activities is going to break that down at a minimum, like the IRS 990, between programs, administration, and fundraising. But it may go farther, and it may say program 1, program 2, program 3, and administration and fundraising. And then the last thing is the statement of cash flows. And I just want to emphasize this is not the same thing as cash flow budgeting. It's required, but it's not that useful. Let's talk about these statements a little bit more, and we have some examples, and we'll have time for conversation if anyone wants to look at their financial statements and ask questions. What is a statement of financial position? Why is it so important? It shows you where you are at a moment in time. It doesn't show activity, it shows stillness, right? So think of a moment in time. And it's usually done at the end of the year. So think of midnight on December 31st. You walk outside, it's all beautiful and starry and cold, and everything's kind of glittering a little, right? What's there? Right there in that moment. What are the assets you have? What's in your checking account? What's in the file of things you need to pay? No, nothing else is going on, right? Everything else is still. What is in that moment? December 31st, midnight. What do you got? What do you owe? What do you got is your assets. What do you owe are your liabilities. The difference between the assets and the liabilities is what's called net assets in nonprofit accounting. In for-profit accounting, the difference between assets and liabilities is what the owners of the company could realize, essentially, if they stopped the company and just took everything back to themselves, right? A nonprofit can never do that. A nonprofit can never have an owner. It only has net assets. And so we use these different words and different names to be really, really clear that it's fundamentally different with a nonprofit, because this idea in for-profit, it's called the equity section of the balance sheet. And in a corporation, you call it retained earnings. And a for-profit owned by one person, it's owner's capital. In a partnership, it's partner's equity. They're all different words, but they all are this concept of equity, which means ownership. And so we don't use the word equity in a nonprofit because there is no owner. There's only net assets. If you stop being a nonprofit, you're legally obligated to give your assets to another nonprofit. They can't go anywhere else besides to another nonprofit. Within the net asset section for corporations and private businesses, there's special things we show within that whole section, in and out and investments and so forth. Within a nonprofit, the special section of the net assets section is to see of those net assets, what is restricted and what is unrestricted. Some money comes to you and it may only be used for certain purposes, or it's intended to be used at a certain time. So if someone writes a check and says, this is for the teen program, you may not use it for the elder program. You may only use it for the teen program. And so if you get to the end of the year and you've only spent half of that money on teens, you can't spend the other half on the elderly. You have to have that money in your accounts at the end of the year, waiting for when you do the rest of your teen program the next year. And so at the end of the year, it would show up in your restricted net assets because you can't use it on whatever you want. You have to use it on that thing the donor said it was for. And donors can also restrict for time. So I just say a general rule, anything that comes in questionable December 1st to 15th, but for sure anything that comes in after December 15th, The donors, if it's large, not small numbers, but if you get a large check, December 15th or later, it's obvious the donor intends it for you to spend in the following year. They obviously don't think it's even possible for you to spend that kind of money between December 15th and December 31st. It's clearly implied by the action of giving it to you so late in the year that it's intended for next year. And so the expectation would be that on your balance sheet at December 31st, you'd show all of that cash still in the bank, and you would show that amount as a restricted net asset. It's not necessarily restricted for a type of use. It could be totally general funding. You can spend it on whatever you want, but not until January 1st. And then you can spend it on whatever you want in that next year. The statement of activities is, again, the income statement. That's much easier to understand, right? Revenue minus expense equals, doesn't equal profit. It equals change in net assets, okay? It's okay for you to call it profit and loss internally and month to month and when you talk to the board casually. But when you see a formal financial statement, it won't say profit or loss because it's a nonprofit. It'll say change in net assets. If revenues are greater than expenses, then on that balance sheet, back here, your net assets number is going to be bigger. Okay? And if expenses are greater than revenues and you have essentially a loss, and back here on that balance sheet, that net assets number is going to go down. So these two statements are mathematically tied to each other. If you ever see one where that net assets number changes by a number that's different from what's on the statement of activities, it means there's an error. There's a serious error because they're mathematically tied together, that those numbers have to match.
Poppy, we have a question from Joseph really quick.
Great. Yeah.
Yeah, thank you. Back to your previous slide, the restricted net asset. If you're doing a Giving Tuesday campaign at the end of the year and you're raising funding for a program that's going to happen the next year, would you classify that as a type of restricted net asset then? Everything that you raise from that Giving Tuesday?
Yeah, that's a really good question. I think there's some subtlety there. And so, you know, if I were your outside CPA and we were trying to decide what the correct presentation according to the external accounting rules are, I'd probably have a bunch of questions for you to really get to the right answer. And I would probably tell you, Joseph, if you do these things, then we can show it as income this year and not restricted. If you do these things, then we have to show it as restricted for income for next year. And that's exactly the kind of conversation you want to have with the CPA, so you understand that you actually do have the ability to change how this stuff is reported up front, right, by your actions. So I think in your example, if all your publicity, if all your communications to the donors says for next year, for next year, for next year, then it's pretty obvious their expectation is it's for next year. But if it's a fundraiser towards the end of the year, but they're small dollars and you just say it's for this program, I don't think it is implied that it's for next year if they're small dollars, individual donors, and you happen to do it late in the year. But if a big foundation gives you $100,000 at the end of the year, there's no way, you don't have to ask. There's no way they expect you to spend $100,000 in 2 weeks. But I think at Giving Tuesday, those checks are, you know, the kinds of checks that you could easily spend all of that money, or any one of those checks could be easily spent by the end of the year. Maybe all of them together couldn't be, but all of them together isn't the rule. I think the rule is on the individual donor. And if the individual donor's expectations are met and you could easily spend any $100 by the end of the year, I think you'd probably not show it as restricted.
Okay, thank you for that. One follow-up, this statement of financial position, is this a report in itself made up of many reports? Like does the state, like these different elements that you have marked out?
Yeah, it's not a report made up of many reports. It's a report made up of many accounts. So in your chart of accounts, you have a savings account, checking account, maybe a money market or investment account. You have accounts receivable maybe for monies that are owed to you. Those are all asset accounts. Each of those accounts may have hundreds of transactions in that account each year, right? So the top part of the statement of financial position and the assets is going to list each of those accounts, cash accounts, investment accounts, receivable, and that's it. And then it's just going to show the balance at the end of the year. And then you'd have to go back to all the detail to see the hundreds of transactions that went into those balances.
Thank you. Very helpful.
Let me talk quickly about the statement of cash flows. It's this formal statement at the end of the year. It's really hard to read, and it just talks about how your cash changed. So we talked about how net income changed, or how net assets change. This statement just talks about how your ending cash balance changed. And so it just has these formal categories of why cash went up or down from operations, why it went up or down from borrowing, why it went up or down from purchasing assets. It is required. It is not helpful. I'm going to show you what has a similar name and is helpful. I just want you to be familiar with this because people always get confused when we start talking about cash flow budgeting. They just want to call that a statement of cash flows. And then they look at a statement of cash flows and they say, this is crazy. I don't understand this. It's useless. I needed a cash flow budget. So I just want to introduce this so you can wrap your head around that difference. I'll come back to these sample statements. Let me just show you quickly on the 990. I'm sorry, let me skip ahead to these internal financial reports, then we'll go back to the samples. The internal financial reports are going to be prepared by the bookkeeper or the controller or the executive director, someone inside. Basically, any financial report not prepared by an outside CPA is considered internal. The key reports you want are a budget, and you want that budget laid out exactly the same way as your statement of activities. The budget to actual is the same. It's just the same exact formatting. It's just going to have more columns. So it's the same formatting as a regular income statement, but it's going to have the actual column and the budget column and the difference column. You need those funder reports and project reports. Other people don't need them, but you need them, and the funder needs them. And you need a cash flow budget. I'm going to show you an example of it in a second. So the budget, you're going to build it from the bottom up. You're going to make sure when you add up all your grants and contracts and all your program activities, that adds up to the organizational budget. The budget to actual will show your year-to-date income and expense against the budget for that item. Often it'll show the percent of budget or the difference between the two. Oops. That's just a simple example of the difference between, you know, if you were just doing the financial report, you would just show the one column. If you're doing to budget to actual, you just show the 3 columns. It's not that big a difference, but it's helpful information. The funders and the project reports, those are going to be tricky because the funder is using categories that are different from the categories you use. And that's what really messes people up, is the funders are using different categories and they want to go change their internal accounting to match the funder accounting. And then they just end up with more and more accounting because one funder calls it supplies and another funder calls it materials. And now you end up with supplies and materials on your chart of accounts and you have no idea why you have those 2 accounts and how they're different. And the answer is you shouldn't have 2 accounts. They're not different. It's just that you have 2 different funders and the funders have that preference. And so you have to have inside of your, and an outside CPA couldn't care less, right? They don't deal with that kind of detail at all. So this is the difficulty of grant reporting, is conforming to their reporting requirements without making your own system get overwhelmed with detail. So they're going to give you often their own format. And you take their format and your numbers and you plug your numbers into their format. You don't make your format match their format internally, or you'll be in tons of trouble when the next funder comes along and has a different format. Here's the cash flow. Beginning cash, plus what you expect in, minus what you expect out, is your predicted ending cash. I recommend you do it month by month. So this is just a picture of this. We can send you a template of this, but this is just a picture. You could do this for 12 months, as in this case, or you could just do it for 3 to 6 months. But I think at a minimum, you should be looking 3 to 6 months out, some sort of a prediction of where you think you're going to be cash position. I'm going a little fast because I want to leave a lot of time. So that's why, so I want to stop here, and we're going to take maybe the last 15 minutes to go through resources. And we have some time to look at sample financials and sample tax returns now. But before I pull those up on my screen, I'm going to stop share. I can pull up those examples for you, but I also want to see if anybody wants to look at something of their own rather than one of the samples I brought. If anyone has specific questions about how to read their own reports. Or just questions on what we're talking about.
I have one question. It can happen now or later. There's a lot of good material here and want to learn more. If you could share, like, I know we've taken different online courses. If you have any recommendations that are well suited for nonprofits, please let us know. I know we've taken some and kind of been unhappy with a lot of the content that was covered because a lot of it didn't apply to us. But if we could go deeper into all of these different, if you knew of good courses, be really interested in that.
Yeah, I'm happy. I'll cover the resources now, and then we can just go back and do examples later. So I'm going to skip ahead to courses because I have this in here. Oh, I didn't underline it.
Real quick, Emily has a question, Poppy, just real quick.
Go ahead.
Hi, Poppy. Quick question.
Hi, Emily.
You were talking about the statement of financial position versus the statement of activity. And my understanding is that the statement of financial position is a snapshot in time, but then is the statement of activity show like a change between 2 periods of time? Is that a good way to think of it?
Yes, thank you, Emily, for that clarification. I should have, yeah, so a statement of financial position is always done at a point of time. So it'll say at December 31st or at March 31st. The statement of activities will always have a time range at the top, and it'll say for the 3 months ending March 31st or for the 12 months ending December 31st. And I'll warn you here, since you asked this question, that you need to be very careful with QuickBooks if you're using it. I have a lot of complaints about QuickBooks, and my number one complaint about QuickBooks is that it automatically runs you reports as of whatever date you ask, and you're always asking on some random day, like February 18th. Nobody cares what the balances are on February 18th. They want to know what the balances are on either December 31st, March 31st, June 30th, September 30th, right? And the income statement, QuickBooks will let you run a statement of financial position for one date and an income statement for a totally different time period, and they don't match, and it's super confusing and it's totally wrong. So you do need to be very careful when you run the reports yourself that time period, 3 months, 6 months, 9 months, 12 months, matches the end date is the same for the balance sheet. Now the balance sheet is for the history of the whole organization, right? It's everything that's happened up to that point in time. And then the income statement is the part of that change that's just however many months you're looking at. You never run an income statement for more than a year, just against the rule, right? It's fine to run it for a month or 3, 6, 9, 12 months, but you never run it for 2 years. For 2 years, you just do it side by side. So if you're running reports, be careful with dates. And if you ask someone to run reports for you, the first thing you should do is check that the dates are correct. And I would say the second thing I would do if I run them both is check that they actually match, that change in net assets on that income statement is the same as the change on the balance sheet. Otherwise, there's an error like deep in the accounting system, and there's no point in looking at the report.
Thank you. That's super helpful.
Yeah, Joseph, back to your question for a second. The last bullet here is paid courses that are for nonprofit accounting. The bullets above it are all free resources that are very substantial. So you can look at all of those and decide, I think it's a good combination of all of the above, right? The paid courses are really great to send staff and to just dedicate the time and to have someone present who can explain things to you and answer questions. But the online resources are also really good when you're just looking something up after you took the class, or deciding which class you want to take, or you need an answer tomorrow and the class isn't until next month. So these are all some pretty good high-level resources that should give you a good vision of the whole of your accounting system that I was talking about. Like, this is just one class I would teach out of 20. And so these resources give you really that whole picture of all the different, like the accounting procedures manual and the bookkeeping and what are internal controls and many, many topics. This slide has resources and checklists that are more geared to the board and to management. So you can use this slide for resources that you would give to board members to help them do board training and to help them understand their specific financial responsibilities. And then this slide is just some resources I did according to the topics that we covered today. So I just put them in by just, if you want to know more about what accountants do, this is a good link to talk about that. If you want to explain that some more to someone else and you don't feel like you can repeat back what I said in this presentation, that's another way you could repeat what I said in your own words to someone else. And then there's a section here for if you just want to go back and review again some of the language we've talked about nonprofit financial statements. Those are some good links. The IRS website for 990s is really good. There isn't a better resource for you to do your own education on when it's required to be filed. Parts of it, of course, are very difficult to get through, but parts of it are very easy. So if you want to ask a simple question like, does my organization need to file a 990? We only have $100. You won't have any difficulty finding that answer. If you want to find out whether or not you have unrelated business income tax, you can read the section, as I often do, 20 times and still not have a good answer, because that's often a question that you could get 10 professionals and they still wouldn't agree. It's a complicated question. And then the internal financial reports, I gave you some more, just some samples of tools. The important thing to understand about internal financial reports, like the internal cash flow, is the big contrast between these and CPA reports is there is no one right way. There's only one way to do a statement of financial position, the GAAP way. That's it. If it's not GAAP, it's not a statement of financial position. There's a million different ways to do cash flow. And there's 1,000,001 tomorrow when you go make up a new one. There isn't a right or wrong way. It's only, can you read it? Can you do it the same way every month? Does your board like it? Can your board read it? Did the board ask you to change it somehow, right? It's entirely what works for you. But here's some resources anyway to help you think through good methods. And there are lots of other resources out there that help you, use templates and learn from other people's methodologies. We still have almost half an hour and we can do sample financial statements. I want you to see some examples, but I just, again, want to stop here for questions. And also, if anybody has any kind of financial report that is bugging them and they really feel like what they want to get out of today is to understand that report, I'm happy to just do that right now.
I have another quick question, if that's okay.
Please.
So if you have a grant that you received and the time period has changed or extended, how will that reflect in the financials? The
organization reports the activity of the grant as per reality, right? So whatever reality is what you report. So the organization's financials wouldn't have ever reflected the end date for that funder. And so they're not going to show when the funder's end date changes. Now, the funder is going to be requiring you to report, say, quarterly or annually. And probably what happened is they saw your last quarterly report and you both agreed together that you needed more time to finish the project, and they granted you permission. So it's a good example of funder financial reports cover often a totally different time period from your standard financial report. So I said an income statement or a statement of activities should always be standard periods of time and should never be more than a year. For a funder report, that's not true at all. A funder report is often for 2 or 3 years or for 18 months. They often have weird dates that make me crazy. They do start on February 12th and end on February 11th of the following year. And those are their dates. And I won't express my frustration. To me, that's just like, oh, it just makes me crazy. But that's just the way it is. That's what they want, and that's what you give them, and it's fine. Just don't mess up your internal stuff and start thinking February 11th is a valid date. And so the tricky thing there is that you can end up with some software that doesn't have the ability to give you reports over funny date periods. Because if it's not specialized nonprofit software, it may not have that capacity, because a normal for-profit business, that would just never happen. And so it's not built in as an option.
I was going to ask a question, and I'm still trying to think through how to best ask it. But so we have many individual grants. Most of them are single year and different starting times, like you were describing. And we're using QuickBooks and then our own system of keeping track of whether we're spending on time. Is there anything that you've seen that's out there that's able to pull the financial and the grant project stuff together in an effective way? Or does everybody kind of just do those things separately and compare different documents and reports?
You've asked a great question, and it goes to the heart of what's really hard about this. It's all easy in the abstract. It's really hard when you're actually managing it. I think most people do end up managing with a combination of Excel and sort of, programs that alert you to your deadlines and their QuickBooks. And no, I have not seen anything that's really good at pulling them together, except that there are very expensive, very high-end software programs that are written for large nonprofits that do all of that. They automate all the allocations. They can report on any time period. They can report on any combination of anything. They're expensive to set up, and you need to hire specialized people to set them up and to train you on how to use them. And at that point, your bookkeeper has to have real accounting chops. You can't just use a normal QuickBooks bookkeeper. So I've worked for years with an organization that, for many reasons, should have one of these higher end accounting systems. It would really make everything easier. They're the right size, they've got enough going on, they can actually afford it, but they'd never be able to hire a bookkeeper, right? Because they're in a remote rural place, and they're always going to be able to hire a bookkeeper who can do QuickBooks and Excel. But they're not always going to be able to hire a person who knows programs that are really only used by the largest nonprofits and are quite specialized and difficult. So I imagine you're probably in a similar position, that you're always thinking about who can you hire, right? And that's the trade-off. It's like, I can give you this answer in the abstract. Yes, you can buy a better system, but could you actually implement that in your community in a way that you could, really guarantee that you're permanently staffed the way you need to be to run it? So maybe if the answer is no, I feel uncomfortable saying I could really guarantee that. Then when you're working with the frustration of the Excel and the QuickBooks and putting them together, like that's the price of being in a rural community and not having sort of an infinite labor pool. And that's the solution to that problem, is to stick with those simpler tools that you'll always have people who can help with them.
Do you recommend, I saw that there are some businesses out there that like their focus is grant management. And so some people are able to outsource those things. Is that something that works? That you
So a little, yeah, I mean, so there's really good accounting firms that specialize in nonprofits. There's independent accountants who specialize in nonprofits, and then there's these grant management specialties as well. I do think it works, but you do have to be careful. I mean, I don't need to tell you this. I'm just going to repeat it, but you should tell me this, right? Like, you got to watch for the cultural sensitivity and their ability to really understand what your community is about. These big nonprofit, they're accounting and bookkeeping firms that specialize on nonprofits. They do pretty good with most of the nonprofits out there, but they may really have a hard time working with some of the specific things that are relevant and important in your community. So it depends on how complex your nonprofit is, right? And how much like working with a tribe or working with certain things really influences your day-to-day. If you really feel like if you're working with someone who like just can't even imagine what life is like, that's probably just not going to be a good long-term fit and not build the right kind of capacity. But if you feel like, yeah, you know that your environment is different, but actually if you look at your numbers objectively, they don't show any of that difference, they could just be any numbers anywhere, then yeah, I think it could be a really good solution.
Thank you.
And the other thing I want to say is there's sort of a middle path, which is to hire a specialist who will look at your current systems and your current capacities and help you see better ways to do what you're already doing and better ways to improve your internal capacity, sort of recognizing that for many reasons that external, fully outsourcing it isn't going to work for you. Getting this really expensive program isn't going to work for you, but there's still probably 20 things you can do that you wouldn't think of yourself that would make everything more efficient and work better.
I love that option. Thank you.
Poppy, I kind of have a specific question. We work with a fiscal sponsor, and the budget that they give us monthly doesn't quite give us the line items that our board members want to see. So for instance, they just have one large travel item, but our board members may be interested in like staff travel, a subcommittee travel. And so whenever they want to see those numbers, myself and another staff member has to go physically account for them individually. Is it appropriate, or is there a way I can ask the fiscal sponsor to, I guess, start breaking things down? Or is it just that we'll have to always kind of pull those numbers manually?
The fiscal sponsor should absolutely be able to add accounts if you need them. Okay. If they can't, then that sort of goes back to the prior webinar we did, which I think you can watch the recording if you weren't there. If your fiscal sponsor can't do that simple thing, that's a really good indication that your fiscal sponsor isn't going to be your fiscal sponsor for the long run. They don't have the capacities they need to have. That's a simple ask. So that's a good test. If they can't do that, they really can't do anything you need done. Now, I do just want to give you one little warning, though. General, just sort of good housekeeping is to try to keep your chart of accounts pretty lean. And general good board management is to keep them from focusing on details. And so if your board thinks that they should be looking at travel at that level of detail, what they actually need is board training. Okay. So it's actually not appropriate for the board to be looking at that detail. The board hires and supervises the executive director. The board delegates management authority to the executive director. If the board does not believe that the executive director is managing the organization properly, that's absolutely the board's responsibility to say so and to give that feedback to the executive director. And maybe if they have concerns about the executive director, they could say, we want to see detail on travel for purposes of giving you the feedback that we think you're mismanaging staff and we're mismanaging travel specifically because we have a specific concern. But if they don't have that concern, and if the executive director is in every way like not causing concern and doing the good accounting, if the board is asking that question, they need board training. It's not an appropriate level of inquiry. No offense to your board, I'm just saying it to like, so you know how you have to start steering them, because the thing is, they have real work to do. They got a lot of work to do. And if they're focusing on travel, they're not doing other things that you actually need them to do and that they actually need to do.
That was helpful. Thank you.
Poppy, since
Go ahead.
people are kind of
Yeah.
low on questions right now, I think Joseph's related questions in terms of that there's options to put things in place that can take them through that process of what is the best next step. Maybe if you can speak to a little bit more, maybe using CPF as an example, or maybe others that have you assisted with in terms of what are those next best steps. And I guess it's probably hard to answer because it depends on where the organization's at in that process. But the resources that you shared, I think maybe even talking about what agencies they can work with that could help them to get to that next step, or who to refer to. I think that might be helpful too.
So is the question about next steps to sort of improve your overall accounting system?
Mm-hmm.
It's a very broad question, right?
Mm-hmm. Yeah.
So I would say, you know, so it's going to be different for everybody because I don't know where you are today. But, you know, so was it Carrie was asking questions earlier? Carrie's under an agency. So there aren't next steps there, right? If you're under an agency, you're under an agency and you do what they say, that's it. It's a closed world. You don't have a lot of choices. You just educate yourself and do your best in that environment. Nothing wrong with that. If you're under a fiscal sponsor, the next steps is to go back and watch the prior webinar if you didn't attend, because that's definitely about working with the fiscal sponsor. And there's resources in that webinar about next steps. Like if you determine that your fiscal sponsor relationship is not ideal, then what is your path forward? That's a path forward from being fiscally sponsored. We have materials there. If you're already your own nonprofit and you're sort of realizing that you want to be best practices, right? You want everything in place. One day you want to be the model of a nonprofit that does everything right. And probably today you're, you know, whatever letter grade you give yourself or whatever percent you are of being there, right? And it's a percent or a letter grade that you'd like to improve on. That's a nice place to be, because nobody gets to perfection. Like nobody's born perfect. No nonprofit is born fully fledged, right? So then the question is like, who are your advisors? First question, who's your outside CPA? First question. Second question, what's your relationship with that person like, or that firm, right? If it's really distant and like nobody would know if they changed or care, maybe not the right relationship for a beginning nonprofit, because you need someone with extensive experience to help you. The same way, you know, the whole reason they make doctors do the whole intense residency where they're in the hospital 24 hours a day, 7 days a week, because they want the doctors to see how people's illnesses progress over time. And they want the doctors to see hundreds and hundreds of patients with hundreds of different things. Then when the doctor leaves that busy hospital and goes to have a normal life, They have that experience of thousands of hours and thousands of different examples to draw from. It's pretty similar with a CPA, minus the, you know, death threats and life, people dying, right? But you want someone who has seen many nonprofits, and they don't think you're that different. They might find your program or your cultural context different and interesting, but when they're done thinking that's interesting, they're going to see the commonality of your numbers and that you're making the exact same mistake that 60% of the nonprofits make, and they know exactly how to fix it and exactly how to give you the recommendation for the better way to do it. So that's your first person. The second person is someone that CPA may refer you to. If they say, our firm can't do this kind of hand-holding, we want to work with you, we want to guide you, but we can only do like the top level of that. We can only do the financial statements and the tax return part. And what you actually need is someone to help you with your daily processes. Your annual processes are fine, but your daily processes, right? They probably can refer you to someone. It may be someone who used to work for them and then stopped working full-time because they had a family, and now they work part-time. And this is exactly the kind of thing they want to do part-time. There's actually lots of those people out there. Or someone, you know, retired but not fully retired. Lots of those people out there. I'm not saying it's easy to find them. You do have to ask around, but they are absolutely out there. And they'll only take on a few clients at a time, and they'll work with you intensively for maybe 1 or 2 years and kind of go through all your processes and procedures. It may include redoing your chart of accounts. It may include completely rewriting your accounting manual, or you maybe don't have an accounting manual, and so they would start by writing out a very detailed accounting manual for you, and that's an opportunity to go through every single process. Write out what you're doing now, analyze whether or not that's actually efficient, and then rewrite it with their advice to be the way that's efficient and also good practice. And that can easily take a couple of years to get through that all.
Thank you, Poppy.
We just have a little time yet. I didn't show examples of financial statements. I wasn't kind of feeling that you were thirsting for that, so I hope that's okay. I can send it, I mean, I don't know if that's useful. I can send you the links of the samples that I had, Marissa, if you want to add that to the PowerPoint that we sent out, just if you want to look at some sample financial statements. And like I said, if you look at the 990, and it's really good to look at, can you all do this for your organization? Can you find the 990 and the year-end financial statements and try to read them side by side? I would say that's one of the best exercises you could do for yourself and for your board. That's the excellent board training right there. That's where I almost always start with the board, is take the year-end audited financial statements and take the 990 and read them side by side, page by page, and play a game, right? Okay, here's this number on the 990. Who can find this same number on the audited financial statement? Okay, here's this number on the audited financial statements. Who can find that same number on the 990? And if you play that game for a little while, very soon people will, oh, I get it now. And they'll understand both documents much more. I can also, if you want, I have a template. I can just show you this really quickly. I don't want to, use this to overwhelm you, but I just want you to know that it's available to you if you want it. Can you see this Excel spreadsheet? So this is an example of a tool. Like I said, there's no one right way to do it, except for Poppy's way is always the right way, right? No. This is the Poppy way, but there's other ways to do it. But this is just a simple tool that you could use for yourself to see if you can do month-by-month cash flow budgeting for your organization and predict how much cash you think you'll have on hand, several months out. Again, if you know you're well funded and you know this isn't a problem, I wouldn't encourage you to spend time on this. But if you actually do spend a lot of time worrying about how much cash you have, then this tool can absolutely help you sleep better at night. When I was briefly the executive director of a small nonprofit, I did this you know, almost every week I would update it. Every time the bookkeeper came in and updated the numbers, the last thing I would do is update this exactly to the bank so I knew where we were going. So I'll stop share, but I can, if you want, I can have Marissa send that out to you, maybe ask for it. I don't want to send it out to people who don't want it and have them, you know, get confused by it and think they need it when they don't need it.
Emily, go ahead and ask your question.
Sorry, so many questions. So you were talking about cash flow projections not being official statements. Is that simply because it's a guess? You don't know?
That's exactly right. That's exactly.
Okay.
That's right. Yeah. The official statement of cash flows essentially says this is how cash flowed last year. I'm always like, who cares? Last year's over. You know, I'm worried about 3 months from now. Right. But yes, that's exactly your point. The CPA can't guess. Their only job is to report the past accurately, according to the rules. Right. And sort of like I said before about the board, like if they're wasting their time sweating travel, they're not doing what they're supposed to be doing. They got big jobs to do. Sort of the same thing for you as managers. Hopefully you have a good bookkeeper and you don't need to supervise that bookkeeper too closely because they're good and they know what they're doing, because you don't have time to do that, because what you need to do is this, right? You need to be concerned with projections about what might happen. And your bookkeeper can't do that. Your bookkeeper is like the accountant. They can only record what has happened, right? But your job as a manager is to be thinking about, okay, well, what does that mean? And therefore, what should I do, right? What has happened is this one grant is not getting spent because 3 people, you know, we didn't hire, and then someone quit, and then someone got sick, and now we're way behind. As a manager, you have to manage that.
Well, we're at that time now, Poppy. So if there's not any other questions, we can probably come to a close and maybe share any last tips for folks, Poppy.
I don't have any last tips, but you're going to send them the PowerPoint.
Okay.
And we'll send the sample links. And then can we just say that anyone who wants the cash flow will ask you for it? Because I really don't want to send it to people and have them just think they're supposed to use it when they don't need it.
Mm-hmm. And I was asked by Heather to share that the CPA we've been working with is has been really excellent. I'm not sure if we included that on the resource list, but we wanted to also just provide folks who we've been working with that have been really helpful for us in making our transition. We made our transition from fiscal sponsorship into full-fledged 501c3. So all the folks we've been working with and resources we've been tapping into are part of this list as well. Yeah, Joanna, Tyler and Rolf, their CPA firm, have been really hands-on with us. They've even requested, or not requested, but offered to present to our board as well. So they're really hands-on with us in terms of their support. And so they're out of Denver. And so, you know, it's just finding good people like that, like Poppy said, you know, people who are really vested in wanting to help nonprofits. And so, you know, if you find that person, you know, hold on to them, but also, you know, be willing to share that as a resource too. And if you see other organizations who are doing great too financially, it's always good to ask them who are they using, or do they have resources that they can refer to you? If you're, you know, in a position where you're wanting to grow, doing that kind of research is also helpful.
Okay, so this is Ben Jones. I think that's good because I just sent Joanna a message to hire her just now. So thank you for that information.
Mm-hmm.
Great.
All right, well, if anybody else doesn't have any questions, I'd like to bring us to a close, and I'll be sending all of this information out via email, the copy of the webinar, the recording, and the resources. And if people do want to see the statement or the cash flow, was that what you showed, Poppy? As an example.
Cash flow budget.
Yeah, I can send that out as well. But these kind of webinars are really geared around what we've been seeing in terms of our work in funding, all the way from small grassroots to full-fledged nonprofits. And we've seen a variety of challenges, and it's helpful, to get not only best practices, but the resources that will help you to get to fully be functioning in a manner that you feel healthy and that you're not worrying, having to stay on top of that cash flow when your time could be spent doing other things. So we're really wanting to support the growth of this area in the nonprofit arena. So we really thank you, Poppy, for your time and providing these resources for the group today. Thank you very much.
It's a pleasure to be here. Thank you so much for having me. I really enjoy being able to have this time with you guys. I wish you all well.
All right.
Hope to come back for some other session some other day.
Okay.
Bye, everyone.
Thank
We'll
you.
See you all. Bye.
Have a good day.
You too.
Bye, you too.